What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head into the rest of the week. This week's very important. We got earnings coming up. It's going to be a huge market mover, whether that's up or down. The direction is still unknown, but we will be watching as the market has provided some nice volatility, especially on today's price range. Before we get started, don't forget to check out the link in the descriptions below. I've got the link to the Rawstocks Discord, where we currently have 30-day free premium trial using the code only10. There's only a couple of those codes left, so take advantage of that. You get my premium callouts. You get Tesla analysis, you get some SPY analysis, you get a lot of market education, and most of all, you get an awesome community of traders that are hanging out during market trading hours and sometimes afterwards. As well as right now we have a book study going on for Smart Money Concepts that is, me, and it's interactive, and we're talking about the book. It's Unlocking Success in the ICT 2022 Mentorship, and that link is also in the description below if you want to take a look at the book. But right now we're doing a book study, a lot of good turnout, a lot of people having good results from the stuff they're learning directly from the book, as well as from ICT's videos for his mentorship. So let's get into the charts. We had a huge range today, right? That was a nice big range. A lot of times on wide range Mondays, we may see theta burn into the Tuesday, maybe even Wednesday session. So it wouldn't be out of the question to see an inside day or even just a small up move. Could be even a small down move, but could see an inside day or at least inside range day, which with that wide range, I mean, the range was 206 all the way up to 218 almost. So that is what, a $12 range. So we're really probably just going to be range locked because of earnings. There's some additional volatility. So we might see, again, another punch up, maybe another punch down. I'm more leaning to the upside on this. Although we haven't seen a smart money reversal, I think this wick from today is going to be the wick that we're going to break when we start to head up, and we're going to see a change of character occur to the upside. Now that's in relation to us finishing the move down, which may or may not happen, have already happened. We talked about some of the potential projections of where price could go. So if we were looking at price, as of Friday close, we were talking about the possibility of coming down and testing the previous week low. We did that. We came down, we swiped it, we bounced back up. We ultimately traded down into the close, but we did swipe that liquidity in the previous week low. So we were talking about if we took that low, what we might see is then a rally up, and that this could happen after earnings, but we'd be looking to target the previous week high, right, which is up here at 223, 224, in between there, 223 and a half, we'll call it. So because that swipe already happened, we might be, again, looking for an inside range day tomorrow, and then potentially a breakout come Wednesday on earnings. But that's not necessarily going to happen. So what we could say is that maybe we also, because we saw that swipe, get a move up inside range, earnings come in bad, the market doesn't like it, and then we get that final move down. Basically, we're looking at 205. We're looking at, 200 being a nice round number. We're looking at 198 being a low of this wick from November 1st, ultimately down to the external liquidity that's found down in the range of 196 down to 193 and some change. So if the market doesn't like the earnings report or the earnings call, we could see a final, massive flush candle that would, more or less, I'd expect to finish the move, and then we might see the rally come after that. But it is a good sign that we swiped the low and held above it for a potential move to the upside. And again, that could look like, something like this. We break structure, right, in this wick here. There should be some kind of fair value gap somewhere that we're going to target, right? And then we could see price rally higher to higher time frame, again, breaking the previous week high, right? And then higher time frame, 1 hour liquidity here in the green line. We got fair value gaps and daily gaps and volume imbalances all in this range here, all the way up to 140. So then we could really see price take off. So we'll just be watching to see, which direction the market's heading, and we'll react accordingly. If we drop down to the 1 hour chart, and we take a look at some RSI. RSI is under the 50, flattening out below the control line. We had a nice move up in the morning. We had a bearish engulfing candle. We kind of faded it, tried to see it pop, and then faded it again into close. So it just, it does look like it's starting to kind of fizzle out as far as the decline goes. You can see this is a nice, kind of steady curve here. We might see some flattening, and then might see a price start to punch up again. This candle move down here on the 10 o'clock hour, although bearish engulfing, again, might just be one last sweep to take that previous week's low, right? We swept it. We rallied off of it. So we'll see if price holds here tomorrow or if we gap down below that previous week low, right? That wouldn't be a good look. We might immediately come back and fill the gap, but we would then be setting a new low of the week. We'd be trading outside the weekly range. If we did break that low, we might expect lower lows at that point. So we'll just be watching to see where market opens. We'll also, for those smart money traders that are watching, we're going to be watching London session high and low. For those of you who tuned in to the book study or follow some of the analysis, London high and low was something we were talking about yesterday, specifically in the book study, and it played out perfectly today, and I could show you on the lower time frame charts. Drop down into the 15-minute. In the 15-minute, you start to see the London session, and I'll show you on a lower time frame chart exactly what I mean by that. But again, similar thing, rally up, saw some displacement occur immediately as we come down, fade out, run the low, the previous week low, saw a nice rally, broke above these highs here, ultimately just kind of faded into close. Wasn't a great closing look, but there was not much movement. It just kind of like faded and fizzled. So drop down into the 5-minute chart. Here's where you can really see some of the London session. So we only get part of the London session because market doesn't open for share trading until 4 a.m. So we don't get the entire London macro, but we do get enough data to set a high and low. And what we're looking for is a higher low to get swept, and then we can potentially target the higher low in the opposite direction. And so what you'll see here is you see our London session, right? Opens up, sets a high, fades that, takes the low pre-market before we open, 9:30 candle, okay? Sets a lower low, starts rallying up, rallies up above the London high, right? So that'd be our target, is we're just looking to, target the London high because we already took the low, right? Finds a top, and then again fades there all the way back. And even lower to take the previous week low. Now, if you look at the 1 minute, you can try to identify where the smart money concept setup was in order to be able to capitalize on that trade. So again, our red lines here, London high, London low, see that low get taken, right? This is all pre-market. Our first candle doesn't open until right here, 9:30. We get that move down. Okay, we're not entering any trades yet. We see that move pop back up, and we get our fair value gap after, we get this change of character. Then we're looking for our fair value gap entry. So again, this is a smart money concepts. This is something that we talk about in the Discord a lot. And it's the way that I trade specifically. So we get our bullish fair value gap. We get a return right to consequent encroachment. That's a perfect entry on a fair value gap, if you ask me. We can also use our fib tool to see where that move falls. Okay, that move falls below discount all the way almost down to the 70.5 inside our optimal trade entry range. Okay, so that was a premium setup. Where are we going to target? Right, we've talked a lot about how Tesla specifically likes to go to the take profit 3, and you can see it goes perfectly to the third target, right? But you could also just take the trade to target the original take profit, which is back at the 0 or the previous high here. Okay, you can take off at the second, or you can target the third and just see how it goes. You can see here we pop up. There's another fair value gap here, right? And so what I'd be doing if I was trading that specific setup is I'd say I'll run it, right, as we continue to blow through these fib levels. As we dip down, if we came down below this fair value gap with a candle close, I'd be out of the trade. But if not, you can run it up to the next fib level. And again, pink line if you were using the pink peach colored line. If you were using London High is slightly above the old low, right? And it's in between the two fib levels, so maybe you just run it up to the London High, and that's still a very nice trade from your entry at 211.48. London High would have been 215, so nearly a $4 move. So that's a very nice smart money concept setup. Now, additionally, we have our fair value gap that we know that acts as a magnet after prices already ran away from it. Okay, so let's put that on the chart. And we see price come down, price pop up, right? Runs out the stops that are up here for the people who started to go short, and then fades that. We get a change of character, but we never actually get a good entry there. Price does not come back up to a fair value gap, specifically in a displacement candle. And so this move here, I did not see an entry. Now, if you were, wanting to not be as calculated, I suppose, there is a tiny little fair value gap here that we kind of like push up to in one candle. It would have been an extreme sniper entry. It would not have been back in premium price. It was not at a fib level, but it is after a change of character. So I would not call that like an A+ setup, but it was there. Okay, we come back down, we pop up, we get a break of structure or another structure shift. We get more fair value gaps, but we never return to them. So they don't really meet my criteria to take the trade. So at this point, I'm just waiting around. What you also could do is, also if you're taking the change of character, you can also target the fair value gap, because we come back down and we close that fair value gap out. We take today's low, right? We come back down. There was an early call entry I took right around the 1040, 1050 area. Where I got that was I saw us come back down, right? I saw us run the lows here, and I took an entry in an early fair value gap. Okay, and then we popped up. We get another fair value gap right here. Trade went for about 10%. I never ended up closing it with the 2-to-1 from my entry. Again, it was on the way back down here. If you took the 2-to-1, I got an entry right about there. And if you were looking at, I think I had previous week low as my stop loss, and I would have been looking for a 2-to-1. You can see it never actually hits and ends up getting stopped out over here. But either way, the rally up from that position up to here gave about a 10% return. So you could have closed it as a quick scalp nonetheless. Right? We kind of fade out. There may or may not have been, good entries here. I don't see any specifically that look awesome. There's not really much displacement. You kind of get this waterfall and a bounce back up. And then we ran below the previous week low. We attempted it. We came back down. We ran it. Okay, and I entered another call in here to swing. That call went also up over 10%. I think it went to about 15%, like 12 or 115 bucks profit. Could have closed that for a nice trade. I chose to swing it because I am thinking that we do see a little more movement to the upside, but we'll see what we get. Also, there was a displacement for a value gap here, but we never got a return to it, which could have been your a different entry confirmation. But we didn't get the return. There was a breaker block here. I said I called out in the Discord, I want to see this breaker block. It's this block right here that ends up being coming across here. Right, and it ends up being about in line with this breaker block or change of character, and I wanted to see price hold above that into close. We got it, so it might continue to hold us long term as we maybe see more of a rally up. So hopefully this has been helpful, educational, helping you with your trade setups or even considering what you might be looking for on the next trading session. I hope you guys have a great night and make some money tomorrow. We'll see you guys in the Discord room, and I'll be back tomorrow for another video. Take care.